as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stockbox interview. Welcome to the Research Talks podcast on Stockbox with Alan Green. Hello, Alan. How are you?
Hello, Mark. I'm fine. Done all the Christmas shopping, I think, bar one or two things. So yeah. Although, of course, it's only going to be the two of us this year with this lockdown that we're all seeing. We are in tier 2, but we're not. Obviously, we can't get together at Christmas, so it's going to be lots of Zoom meetings, and I think we're planning to meet some people for a walk with the dogs on Christmas Day, and just or some of our family for walks with dogs on Christmas Day, and just toast in the distance.
Walks with dogs on Christmas Day sounds good to me. Yeah, it sounds like a good thing to be doing.
Well, I think the weather's going to be bright and cold, which is the best sort of weather for Christmas, really. So if that's the case, then yeah, that will generate a Christmassy feel, I hope.
Yes, and I liked your picture of your Christmas tree. I'll have to get a picture of mine up to to reply to yours. I'll do that today if I remember. But yeah, good to see yours.
I stopped short of putting the picture up with me with the antlers on. I thought that would be tasteless, but no, it's very good to see from everyone that quite a few people posted pics of their Christmas trees too. So yeah, keep that one going. It's actually given a festive feel to the whole thing, in spite of this absolute storm that we're in the middle of. But anyway.
Anyway, so let's talk about something perhaps to look forward to, because the theme of today's research talks is almost top picks for 2021, or what we think that stocks that are worth watching or have got great potential throughout next year, and they are all in the resource space, aren't they? And I think that sort of backs up what the theme of a lot of the things we've been talking about, Alan, over this year, which is, of course, the excitement in the resource space, really led by gold.
It has been quite an incredible year, and I remember being at an event at the end of 2000. Well, it was towards the latter end of 2019, and the presenters were bemoaning the fact that the mining resource sector had really been on its back for so long, and a recovery was due. In fact, it was Paul Johnson really sort of outlined this point. He was presenting for one of his companies at the time, and just said that it's been such an extended period in the doldrums that we do expect a recovery. And of course, when a crisis such as the one we're seeing now emerges, well, not that we've seen a crisis like this before, it's completely unprecedented, but anything like this drives investors towards precious metals. And of course, it's driven the price of gold up, driven the price of silver, other precious metals, and of course, commodities too. So there is a perception, of course, that this huge amount of money governments around the world are spending on trying to keep people at home and pay for their outgoings with furlough schemes and goodness knows what else. It's going to end up with the most enormous bill, and effectively assets will become cash assets will become devalued, cash will become devalued. So there is a store of value in these hard, tangible commodities. And what we've seen over the year is that a raft of junior mining and exploration and energy companies with assets that hitherto were considered uneconomical to develop have now started to look at these assets again. Modern mining techniques, data mining, desktop modeling, 3D modeling with aeromagnetic surveys and other forms of modeling are providing some hidden value in already valued assets. And of course, we've seen already for so many companies that have these assets a real move forward in their respective share prices, on the back of which they've been able to conduct other activities, accelerate development on other dormant assets, and it's just become a very exciting space. And I think, given the backdrop, this isn't going to go away anytime soon. I think, probably next year we're going to be talking about a similar outlook for 2022.
Absolutely, absolutely. Okay, so what we're going to do, Alan, I think, is we've got 6 companies to talk about today, and maybe 5 minutes or so on each. Otherwise, we'll be here all day. But yeah, we've got 6 companies. We've got Ecr Minerals is one. We've got Redrock Resources, Panther Metals, Power Metals, Cadence Minerals, and finally Conroy Gold. So yeah, those are the 6 we'll talk about. So I don't know, where do you want to start? It's up to you.
Well, let's go in the order you've just laid out there, Mark. So,
Sure.
so we'll start with Ecr Minerals, and of course we've spoken about this company on numerous occasions, but it is based in the goldfields in Australia, and we're going to be talking about Redrock Resources and Power Metal, who have licenses in the same territory as ECR, but ECR is plumb center, so it's right in the middle of all the activity. It's got its 2 flagship licenses are Creswick and Baylisten, both of which are 100% owned, and currently Creswick has a geological anomaly called the Dimmock's Main Shell, which extends through down to Ballarat in the south, and Ballarat, of course, is famous for its own gold mine, which is operational there, producing gold, and further down through into territory owned by the Power Metal and Redrock JV, which I'll talk about later. With Creswick, ECR are currently in discussions with a number of key players in the area in regard to a JV. Just worth saying here, of course, a lot of comparisons have been made with Greatland Gold, the company that developed the Havieron asset, which is a 4.2 million ounce asset resource in Western Australia. That's been developed. Greatland Gold developed with the joint venture with Newcrest Mining, and they now own 30% of the asset. Since the time the company developed Havieron, Greatland Gold's market value has increased to 1.2 billion, and of course ECR's market valuation is sitting currently at 20 million sterling, just over. There's huge potential there. So if the asset in the ground is in any way similar, of course we're going to see a huge explosion in value. We then move on to the Baylisten asset, which is in the northeast of the Victoria region. This is about 50 kilometres east of the Fosterville gold mine, the most profitable gold mine in Australia, and it's Craig Brown, the CEO of ECR, has said that Fosterville is almost printing money. It's producing 500,000 ounces of gold a year and making a huge amount of money on each ounce it produces. Within the Baylisten license area, lots of historical workings, lots of licenses, one of which is immediately south of a license application made by Newmont Mining, the mining giant, and ECR have stated there is a lot of interest already from majors in the Baylisten asset also, both of which, as I say, 100% owned by ECR. ECR are fully funded. They've got they raised 600,000 earlier in the year. They've raised 400,000 from warrants. They've also raised $500,000 from the sale of the Avoca Timor and Mournbull licenses to Fosterville South. Fosterville South is having a great run in its own, the TSX listed company, which is developing the Gold Mountain project. The other X factor, or the other factor that could be a real asset for ECR in 2021 is, of course, the Tambo crossing licenses, which the company acquired early this year. These are in Eastern Australia, and they're in an area that the incumbent geologist, Dr. Rodney Boucher, A, grew up in, and B, did his third year thesis at university on. So this company's got everything to offer investors in 2021, and I think it's once we hear news on this JV, it could be an incredibly exciting time, but still very, very moderately valued or modestly valued at 20 million.
So even after the current sort of interest there and the run in the share price, is it just the beginning, do you think?
Oh, absolutely. I
Okay.
mean, as I say, I think the Greatland Gold comparison is key, and it's important to remember that ECR owns those two key assets outright. So it owns Baylisten and it owns Creswick. It's also in the hunt for. There's a license just to the south called the Outer Ballarat license, and ECR has made an application for that, and that will be decided by the authorities in the coming months also. So. But as it stands, there's already joint venture negotiations underway with several parties in regard to the Creswick asset as it stands at the moment.
And target price, Alan, for 2021?
Target price. Well, I can't really give a target price. I mean, in the back of my head, I'm thinking, well, if Greatland Gold is valued at that level, if there is an asset established in the ground and they're working, ECR have a working interest in a joint venture going forward. With one of the major players, which is quite possible, then that could explode into life, and we could see multiples many times ahead of where we are now. I think you've got to look at Greatland Gold for the potential. And clearly, if that does come on stream, then it's going to take months to develop and take it to the next level. But that's just the Creswick asset. We've got the Baylisten asset too. We've also got the royalty payments. The company is fully funded. It's got its own diamond drilling rig, and it has. I think it's got everything in place to take it to many times the current multiple it trades on now.
Okay. Well, yeah, let's watch that one going into next year. I agree with you there. It's certainly one to watch. Now then, let's move on to Redrock Resources.
Okay, Redrock Resources. So in conjunction with Power Metal Resources, Redrock has, as described by Andrew Bell, of course, the CEO and the chairman of the group. Andrew Bell is also the chairman of Power Metal Resources. This is a diversified resource company. It's got a tripod of interests, as Andrew describes. It's under. I think the value in the company is that there's a foundation there from a dividend that's paid out by the Jupiter mine, which of course is one of the lowest cost manganese mines in the world, and this is in the south of Africa. There's a dividend yield of some 17.5%. Some 17.5% for Redrock Resources every year, but Jupiter production this year has been extremely resilient, and this financial support for Redrock continues. Added to which, there is an iron ore asset which the company are in the process of spinning off into a potential IPO, which could create a new source of value for Redrock going forward. So that if you like that provides a firm income going forward, and also now some upside with the iron ore asset. We then have the joint venture with Power Metal Resources, and this also is in the Victoria area of Australia that I've just described and outlined with Ecr Minerals. The Redrock Power Metal joint venture has license areas just to the south of Ballarat and spread across the rest of the region. There's a very good map actually on both websites that shows very clearly where all the different licensed territories lie, where ECR's is, and where Power Metal and the Power Metal and Redrock joint ventures assets lie. There's a lot of value here, of course. The company recently employed a geologist to represent their interests in the area, and this guy's very well known and regarded by his contemporaries in the region. There's also a lot of nascent value for Redrock in the shares it owns in Power Metal Resources. It owns 25 million Power Metal Resources shares and 25 million warrants. And as we know, Power Metal shares have been doing pretty well recently, so that's going to add significant value to the Redrock asset. So So Redrock have this the joint venture, which in the same way as ECR is developing its own Crescent and Baylisten assets, these license areas will be developed and will go through geological testing in 2021, and I'm sure we'll see some drill targets identified before too long in Victoria. We then move on to the DRC, Democratic Republic of Congo. There is a copper and cobalt asset which, due to political issues, has lain dormant for some time. However, those issues are now by and large resolved, and recently a geo program was mobilized to identify drill targets in an area that contains copper and cobalt assets. The Redrock are identifying drill targets through this program for 2021. So again, there's a really diverse spread of assets, all at different stages of development, that will start to drip value into the company and the share price as we go forward.
Okay.
And then we have finally with Redrock, we have the Kenya Gold Project, which is the Migori project. Mm-hmm. There is a 1.2 million ounce mineral resource estimate for the gold project in Kenya, and that is currently being updated. So we'll get some updated numbers on that in 2021 also. So again, there's a real cross section of assets, a real cross section of value that will basically manifest itself at different times throughout the year. But as I say, all the way underscored by this steady feed of dividend income it receives from the Jupiter mine. Yeah,
I think with Redrock that is quite a significant point, isn't it? That dividend income that really does. Take some of the perhaps the pressure off a little bit on funding, which is nice to have in the junior explorer. But I like the Redrock because of as you say, the cross section of projects they have across different countries, and let's see what Andrew Bell can deliver in 2021. He's certainly one for doing deals. So
well, he is. Yeah. What he said. I mean, the company issued an update at the start of the month. In fact, about a week or so ago, and he said everything is lining up for an active 2021. We're pleased with the progress on all fronts, and it's really come to fruition very quickly, because earlier in the year the company was struggling to get by, but he said we believe we have exceptional projects with good science and good exploration. We can bring their potential to light throughout the year. So yeah, and Andrew Bell is a guy that delivers. I think he's well regarded both by his peers and also by the investing community. So yeah, a very exciting time lined up for the company as we go forward.
Okay, great. Okay, moving on to Panther Metals, the PALM.
Okay, so Panther Metals, again, Darren Hazelwood, another very well-regarded fellow in the resource arena. As I say, well-regarded because he walks the walk and talks the talk. He has developed Panther Metals and is steadily building value with a great range of projects around the world, but also as an investor in his own right earlier in his career. He understands what the retail investor market wants to hear. He understands about communicating with the market and communicating with the institutions, which is something, I think along with Paul Johnson at Panther Metals Resources, I think a lot of CEOs could learn an awful lot from those two. It's a key skill set to have when you're developing a company with a set of assets that do take time to bring to fruition. Mm-hmm. So Panther Metals have a range of assets. Primarily, they're in two regions. They're in Canada and of course Australia. So they have the Big Bear project in Ontario, Canada, which is within the Schreiber Hemlo Greenstone Belt. And as the assets have been developed, samples have been taken. There are active mines in the area. Of course, we've got the Teck Resources Newmont and Barrick all operating there. You've got the Hemlo mine operated by Barrick, which has produced 22 million ounces of gold to date. So the company are seeking gold. Then they, as the year progressed, they acquired properties around Dotted Lake. And as the year has progressed, so has the Dotted Lake project. The company has undertaken some geological surveys, geological aeromag surveys of Dotted Lake. It's identified drill targets which are going to be drilled in 2021. And again, this is. It's such a vast area, and also access is the areas are fairly remote. So they've undertaken the work, a lot of work during the winter months when the ground has frozen up, and access has become easier in many ways. So that has really that has brought the Canada project to a point where we're going to see some what I believe will be quantum leaps forwards as we go into 2021. Mm-hmm. On Dotted Lake, going back to November the 5th, high-grade gold was confirmed at the surface of Dotted Lake, and the ALS lab samples verified historic data was taken in 2010. So there's existing data there from samples that were undertaken during the year. As I say, once we've got these drill targets identified following the survey, then Dotted Lake will progress. We then move to Australia. We have 3 assets in Australia. We have the Maracay Gold and the Anabaru gold projects, both in the Northern Territory. Maracay is 70 kilometres east of Darwin. Anabaru is 105 kilometres southeast of Darwin. And again, all of these are, I'd say both of these are sited near to active producing mines or historic mines that have historically produced decent grades of gold. With Anabaru, we've got Newmont Mining identified the Donkey Hill prospect some years ago and undertook grab samples, which produced some pretty decent results, 61 grams per ton and 50 grams per ton from grab samples in that area. In Maracay, a 30-ounce nugget was discovered at Russell's Roost, which is one of the mines near to the Maracay prospect, and again. On the back of the developments in Australia, the company then, Panther Metals, then announced in November that it was taking a major step forward and was acquiring the Marulia Gold Project. And this is a gold project in the Laverton Territory, Eastern Goldfields, and Laverton is famous because there are so many famous gold mines operating in and around this area. We've got the Sunrise Dam, the Wallaby prospects, Burtville East, Granny Smith, and the Marulia Gold Project was acquired from Ecr Minerals. There was a cash payment of $112,000, and an additional fee will be incurred for extra licenses that were added to the Marulia prospect. So again, we've got in summary for Panther Metals, the Marulia acquisition in particular has put Panther Metals alongside premium grade gold mines in the Laverton Greenstone Belt. Panther Metals has got cash in the bank, 261,000 as at June 30th, with some warrant monies that I believe have come in subsequently. So again, given the valuation that Panther sits on at the moment, it's not as far forward as some of the other mining companies we've discussed. There are some great developments in prospect for the company in 2021.
Mm-hmm. Yeah, I agree. It's definitely one to watch very closely as Panther Metals. It's done so well so far this year. I mean, what an achievement since moving from that Aquis exchange to the main market. That really was the start of the journey, and to Well, hats off to Darren. He's really pulled it off so far. But I think it's just getting started. I can just feel next year's going to be very interesting for that company. And with Darren, he's an honest guy, and he's going to keep you updated. You'll know what's going on, and you can trust him to make sure that any money you put in the company is certainly well spent. So very excited about Panther.
Very much so, and I think Darren will also just tell it like it is as well.
Yeah.
He won't dress it up. He'll tell investors exactly. If you were sitting there chatting to him, what you'd hear from him is what he will say in a public statement from the company. So that's great. You always know where you are with a company, and that's as important as anything else. If you're always getting good, strong communication, there'll be steps forward. There'll be perhaps some of the prospects won't develop as quickly as you'd hope. So, but you'll know about that en route, and that's key that's key for any company, I think, to take a leaf out of Darren's book in that regard.
Mm-hmm. And talking about one CEO to another CEO with similar attributes, of course, Paul Johnson. Move on to Power Metal Resources, Alan.
Yeah, well, it's funny when obviously we're trying to summarize these companies as quickly as possible.
I know.
But, so I'm looking at the other companies, and there are 4 or 5 bullet points, and then Power Metal, we've got sort of 8 or 9 bullet points. It's simply because this is a company that is just awash with prospects, and also has identified and invested into, at a level that really brings value for shareholders, subject to success and subject to opportunities arising with these prospects going forward. So we've already spoken about the Redrock Australasia joint venture with Power Metal Resource with Redrock Resources. Of course, that's a 49%, 51%, so 51% Redrock, 49% Power Metal, and Redrock, of course, in exchange for that, have the shares that we discussed. So there's value there in both companies, but. Of course, Power Metal Resources has so many projects on the go, and I'm going to list them off one by one. We've got the Redrock asset. We've got the Botswana Malopo Farms drilling results due early 2021. Currently, the company are drilling. This is an asset that potentially contains what the company refers to as massive nickel sulfide and platinum group metals mineralization. So this is it's an asset where the company have identified drill targets. They've gone in. They currently just completed the second drilling hole, drilled down to about 700 meters, and they've already intersected what they refer to as conductive targets. And of course, the Aeromag survey identifies the conductivity of the metals, and then the drilling program confirms that. And indeed, we've confirmed that the company announced this morning, which of course is the Tuesday, 22nd December. It announced that it had intersected several conductive targets, which is great news. So that's Botswana. We're going to have more on those drilling results and the assay results in early 2021. We then have the Kasinka project. The Kasinka, of course, is a project that the company have developed, and it's moving now to drilling phase, subject to geophysical surveys being undertaken, and we are due to hear more on that in 2021. We have the Alamo Gold project in the USA. I should say Kasinka is also in Botswana. We have the Alamo Gold project in the USA, which is also moving to drilling phase. Geological works. There's the team have basically built constructed a camp at the Alamo project, and they are currently undertaking survey work. That's moving to drilling phase in 2021 once the targets have been identified. We then move to Canada, We have the Silver Peak project, where initial drilling results are being assessed, and we'll have news on those further in 2021. Then, of course, we go back to Africa. We've got the Hanetti project in Tanzania, which is a joint venture with Conroy Gold, 65%, 35%. That's 65% Conroy, 35% Power Metal. This is a nickel and lithium project, and again, drilling results will be due in early 2021. The rigs being mobilised and is currently being put in position, so we will have results on that in the not too distant future. And again, the Kalahari copper project. The Kalahari copper project is moving to drilling, subject to the results from the geo surveys that are currently taking place. So there is just a raft of projects all at various stages of development, and any one of those could explode into life with a major find, with confirmation of the surveys through drilling. Any one of these projects could explode into life at any time. And Power Metals still trades on a modest valuation. During the year, it's very well funded. There's plenty of cash in the bank. The company's raised over 1.3 million in warrant exercises since August this year. Of course, Paul Johnson himself has been buying shares in the company left, right, and centre. Now owns 61.5 million shares. That's 7.1% of the company. So. This is one CEO that absolutely puts his money where his mouth is, and I think there's obviously inherent risk in mining, but the great thing about Power Metal is that it's actually reduced that risk significantly because it's got such a great spread of projects, and really any one of these projects, if there's a major find in any one of these projects, is the potential value there will eclipse the current value of the entire Power Metals organization. So it's important to remember that, and I think this is one that is very likely to explode into life in 2021. And in terms of valuation, goodness me, I mean, if three of them came off, goodness me, I mean, we literally, sky is the limit. Could move from a junior mining an exploration company to a mid-cap production company in a very short space of time, given the assets and the resources it already has.
Well done there, covering it all in that time. That's an achievement, Alan. Well done.
Was that 5 minutes?
It's about that, yeah. No, that's an achievement that you deserve to go and pour yourself a whiskey. Although maybe it's too early, but later on tonight you can sit back with one.
I may well do that. Well do that. So
let's move on. We've got two more companies to cover. The next one is, of course, Cadence Minerals.
Yep, Cadence again at a very exciting phase of development. Cadence is a mining investment company, and it has a number of assets around the world at various stages. The flagship asset, of course, is the Amapa iron ore asset in northeastern Brazil. This is an asset owned by Anglo American. In 2012, Anglo American valued the Amapa iron ore mine and asset. And bear in mind, this is an iron ore mine, so it's the entire mine with the buildings and infrastructure. The railway line that runs from the mine to the port of Santana, so it's got its own private port, and of course the railway itself is actually a commercial railway. And once that railway is up and running again, which they have the permission to do, they will be able to generate some revenues from passengers using the train if they decide to do that. So that's an interesting thought. But so the Amapa asset there, the resource, the iron ore resource at Amapa was recently upgraded from the initial estimate. So the value that the asset was bought back from the administrators at has actually increased. There are three phases to this investment, three key phases for Cadence that are left. they've basically secured the asset out of administration from or through the judicial administration process. They've secured the rights to transport the iron ore to the port of Santana. They've agreed settlement terms with the creditors. Those are currently they're currently with the lawyers, and once that legal process has been completed, then Cadence will make the initial $2.5 million investment to which is that cash is currently in escrow, and that, along with the sale of the some $60 million worth of iron ore tailings at the port, the monies from that will start to go to A, repay the creditors, and B, recommission the Amapa mine. So at that point, Cadence will then own 20% of the Amapa iron ore mine. With a further $3.5 million investment, it can move to 27%. And phase 3, it has first refusal to take its investment up to 49%. Now, this is a mine that is estimated, once it's recommissioned, it will be generating some $136 million of EBITDA per annum. The iron ore product has been sold all over the world and is well regarded. It was supplied to China up to 2012. So, given where the iron ore price is at present and the strong demand, then they're selling into a market that would be very receptive to continue purchasing the product. So Amapa could be absolutely huge and transformational for the company that's currently still trading as a microcap. So that's the first phase. We then have the investment aspects of the Cadence portfolio. European Metals Holdings, Cadence owns 13% of that company. European Metals, of course, owns the Synovic Lithium project, which it is also part owned by CEZ, the European utility giant. The lithium asset there is it's estimated it will be producing some 25,000 tons of lithium per annum, and has a net present value currently of $1.1 billion US. So it's 13% of that. That's with EMH. It has 30% of the Yangibana rare earths project in Australia with Hastings Technology Metals. Hastings has already agreed numerous takeoff agreements and is funded to develop the mine infrastructure. And finally, it has a stake in Panther Metals, which is TSX and ASX listed. That's the Lake Giles iron ore project. And this was newsworthy last year when the Cadence share price exploded after Panther Minerals announced a 10-year takeoff agreement with Glencore worth some $4 billion. So again, there's huge nascent value in that too. There are also a couple of other lithium projects that the company owns, but in terms of valuation, those aren't really reflected in the share price.
Okay, excellent. Well, that's great. Thank you, Alan, for that. That's Cadence Minerals. And we'll finish today's research talks by talking about some Irish gold. So let's go to Ireland, and what can you tell us about Conroy Gold?
Well, Conroy Gold is the namesake of Professor Richard Conroy, who again is a veteran of the mining scene in every sense of the word. Professor Richard Conroy, of course, formerly his other companies is involved in Natural Resources PLC, Galmoy Zinc, Conroy Petroleum, and he's also, he was the founder of Conroy Gold in 1995, and is also an emeritus professor of physiology also. So he's a very talented individual. So Conroy Gold have a series of assets in northeastern Ireland. The company have a number of assets. There's the Clontibret assets in County Monaghan, the Clay Lake asset in County Armagh, the Slieveglar asset in County Cavan, and all of these assets have been active at one point or another. But it's the Clontibret asset that really is the jewel in the crown here. There is a combined resource estimate of some 327 320,000 ounces indicated, a total of 517,000 ounces of indicated resource across the three assets. But it's the, as I say, it's the Clontibret asset that has really progressed this year through a joint venture that was agreed with Anglo Asian Mining in July this year. To develop a gold mine at Clontibret and to continue the exploration work that Conroy has already undertaken. And of course, this has seen a sea change in the valuation of the company this year. The company was able to raise a further 800,000, a placing at 25p, and since then has raised a further 450,000 in warrant exercises. And despite declaring a loss for the year, is very well funded to progress and take this forward. So during 2021, we expect to hear and see progress with Anglo American, who've agreed to commit €2 million to acquire an initial 17.5% of the Clontibret mine, with an option to increase by 20% by upping the spend to €4 million to complete the primary program to develop it. There is also a further option to acquire 55% by funding the Clontibret asset to mine construction. So the agreement covers the Clontibret assets, also 2 licenses at Clay Lake, and 9 Longford Down licenses in total. And of course, Anglo American, as we know, is cash flow positive. It's debt free, and has many other assets within its portfolio. So again, whilst there are the other assets within the group, we've got, as I mentioned, Clay Lake, Glendish, and Sleafgar. It's all about the joint venture with Anglo Asian, and I think we've seen the share price progress, and further money raised by the company, really all underscoring the potential for the company in 2021. We spoke right at the start of this podcast, Mark, about the backdrop for gold, and why we believe exploration companies are so well placed to further develop and deliver further value to shareholders in the coming year. And Conroy Gold is right up there with some of the very best, because this joint venture is in place. There's also a well-established asset there, and I think it's from the investor standpoint, it's very much pushing on an open door, I think, when it comes to developing this and extracting further value from the Clontibret mine in 2021.
I think with Conroy and that joint venture, although it's pretty much as good as done from what you can see in the public domain, and AAZ, Anglo Asian, have mentioned it a few times in presentations and various releases that I've seen. It's still just not had that signature, has it, on the dotted line, I think, and these things always take a lot longer than everyone hopes to get everything, all the ducks lined up, and then finally get everything signed. But I imagine Conroy is one to watch pretty, early on next year, i.e., January, because I think everyone was expecting that joint venture this year. It's probably unlikely to happen now, but every day it gets closer and closer. It's just little changes here and there probably, but I think early next year, let's see if they get that joint venture started, and that really is then going to transform that company.
Well, I think the asset, the quality is there in the asset regardless, and if for some reason the Anglo-Asian deal doesn't progress, which is I can't see for a second that it won't, but there will be plenty of other willing partners out there, I'm sure. Worth mentioning as well that the geology of Clontibret is very similar to the Fosterville mine in Victoria, Australia, and of course we've already talked about that when we discussed ECR and Power Metal and Redrock. The Fosterville mine is the most profitable gold mine in Australia, and one of the most profitable gold mines in the world. So the geology is very similar, so it makes extraction easy. It keeps extraction costs down, and of course, all the while we've got the gold price pushing higher. It can only go one way. So I can't see. I think there is a compelling argument for gold in 2021, and I think, I'd be very surprised if Anglo-Asian doesn't push ahead and finish with this. It may be, of course, the delay is coming from the Conroy side. There may be reason for that. Maybe Richard Conroy believes that he can extract better value than is currently on the table.
Yeah, exactly. You don't know what's going on, do you? Until you do, basically.
No, but if you want to lie in the sand, or if you want a floor of value within this, then of course they've raised that money at 25p. So that's got to that's got to give a very firm indication of where the value lies in Conroy Gold.
Okay, well, there we go. Thank you very much, Alan. That's Ecr Minerals, Redrock Resources, Panther Metals, Power Metal Resources, Cadence Minerals, and Conroy Gold, our top picks for 2021. And on that note, I'd like to wish you a very happy Christmas. It's been a pleasure throughout this year having you on a weekly basis and having a chat. I've learned an awful lot. We do appreciate your time, as do our listeners. So happy Christmas, Alan. I know it's just you say you and your good lady, but I hope it's enjoyable and peaceful and full of fun as much as it can be this year. And I look forward to continuing our chats in next year.
Well, thank you very much, Mark, and reciprocated. A very happy Christmas to you and your good lady. And let's hope for a happy Christmas all round and a peaceful, prosperous, and COVID-free 2021.
Excellent. Well, thank you very much, Alan. Take care.
Thanks, Mark.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.